Ajay Srivastav joins us, Chief Executive Officer with Dimensional Consulting, joins us live from the NCR region. Ajay, morning. Thank you for joining us. Ajay, 2013 is off to a good start. After the recent run-up, how exactly would you stack up the risk-reward ratio?
See, I think we need to be, cautious but optimistic, because government has moved pretty sharply. It continues to move in the right direction. So we may have a lot of disbelief in the economic system, but the fact is government is moving. Now the only question remains is that the whole rally is predicated on the inflow of foreign money. I think that's evident to everybody by now. The locals don't believe in it. Local institutions itself are sellers, mutual fund are sellers, redemption pressure is huge at this point of time. So there is a disbelief in the local system and there is a fond belief in the foreign investors. I think that's the trade-off where we are sitting right now. And I think the bottom line is the Indian investor has lost out in not participating and still not believing in that things are pretty okay, unless and until there is a big reversal of FII money. I think we are on the right track.
What do you make of the energy sector right now, Ajay? Do you think there's a re-rating, so to speak, happening in the space?
Partly then it's already happened in the terms of the marketing companies have already gained a lot of value and are reaching, I think HPCL is one-time book value, BPCL is already two-time book value, Reliance has come up from 700 to 900. But I think the moot point everywhere the story is the same. That lack of capex cycle means that all the resource companies, particularly in the oil sector, will not face any kind of competition next 5 to 7 years. A refinery is 5 years at least in the pipeline. If a new one comes up, refining capacity not coming up. So whether it's Kane Energy, whether it is Reliance, whether it is the oil marketing company, whether it's ONGC, they all are going to have a free run for the next 5 years in this market. And I think that's an important point. And therefore a lot of optimism, a lot of buoyancy, and once the decontrol happens, and I think that's the important part, and looks like that it's on the cards, these companies will get re-rated much more. They've gone up quite sharply. I think ONGC went over 250 to 320 in a sharp manner. Similarly, HPCL, BPCL. So market is pausing, but I think the next stage of rally is round the corner again, and people need to watch out for any correction to get into this area, because this is a 5-year stock market rally in this sector. It's not going to be a 1-year rally.
Ajay, so what's your favorite from the oil space? Would you like to align with Reliance, where the cycle is reversing? Would you like to go with ONGC, where subsidy will come down? Or would you like to go at the bottom of the barrel, pick up something from the OMC basket?
See, I think one would tend to divide investment if you want to go in the bucket as say 60% the marketing companies, 40% the production companies. And the only reason being that should there be a big decontrol, the direct beneficiary first line would be the marketing companies, and provided that there is no correction in the oil prices in the global markets, the oil companies would also gain by lowering of the subsidy burden. So, but a direct beneficiary is going to be the oil marketing companies. So we are recommending that, we have always not recommended, but that's the way the allocation is right now, is 60% in the marketing companies and 40% the production companies.
Ajay, so far this year earnings have been gangbusters, news flow has been quite supportive, and global cues are quite constructive. But if I look at the Nifty, what do we have on the ticker? A print of 6070, 6080. Market momentum is looking slightly tepid, and with each passing day, the breadth is getting narrower and narrower. Is that a concern that markets, that we are not staring at a rara bull market despite such constructive news flow?
Well, in a manner of speaking, it's a concern because all that you summed up should give a good roaring bull market. But in a manner of speaking, it is very good for the market because as long as there is caution in the market, there is room to grow in this market. And I think that's the bottom line. That we as a nation are heavily underinvested. We did not believe in this rally. We still don't believe in this rally. And I think, but the sectors of this rally, existing companies, people have to disconnect and say, a company is going to go to do 4-5%. But some of these companies could do pretty well. But the critical point is not that the index has moved from where to where. The critical point is stock movements. That where you thought the story was playing out, you went in, you hopefully encashed it, and then you moved out. This is a market which is not getting on a one-way street. If you look at the market darling Mahindras, it reached 980, 970, it touched back 880. It's giving you a chance to get back in again. Look at Tata Global Beverage. It went to 190, it's come back. Look at PVR, news-based. buying, went to 330, came back to 260, 265. So it's, it's a very healthy market which goes up on euphoria, goes up on news little bit, then travels back as people book profits, allows you re-entry again. So, and therefore you're feeling much more confident in the market compared to at any point of time, because we don't have a local euphoria. We are seeing corrections taking place, even the premier stocks, allowing you re-entry levels in it, and therefore it's giving you time to balance your portfolio. In a normal rally, you would never see this kind of movement back and forth. This is a good quality rally, but the only caveat, as I'm saying, is people are saying with the current balance of payment deficit, you've got to bet against the rupee and against the domestic companies in export business. I think that's the bottom line, barring the IT sector. So there is a lot of caution saying, with the rupee where it is going, with the balance of payment, the fiscal deficit, how much legroom the government has. They don't believe the fact that this lack of legroom gives chance for the Indian companies to make supernormal profit. We have been discussing in last 1 year, we still say existing companies are going to make supernormal profit in the next 3 years purely because the capex cycle is zero.
So you are not of the view that we are staring at a new market. What you're making a case is that we are in a trading market, make your 10%, make your 20%, at max make your 20%, 25% and go home.
Of course, the point is that the market price discovery has gone up so fast in the system. Earlier it took us weeks and months for the price to go up. Today you see a single news would make the price go up by 25-30%. You are meeting your price targets much faster than ever before. Earlier it took you 1 year to get 30%. Today it takes 2 trading days to get 30%. Now the question is, let's not get religious about the fact that long-term investment is the only way to do it. This is one market where you need to move around, where you need to encash the gains, where you need to encash the market euphoria and move the sectors, like the PSU sector, which was down and out, is a current darling, and I think that will remain a darling for a long time because government is taking steps to liberalize pricing, improve profitability and so on and so forth. So you tend to go and buy there. You will tend to go buy private sector power companies because the government has no money and NTPC's record has been pathetic. So that's why you see a lot of rally in the power stocks coming around. So you need to keep churning your investment. You saw HUL down by 100 rupees, now starting his leg up again. So you're right partly that we have to be nimble in this market. We can't remain fixated to a trend.
Last time when we interacted with you, you were bullish on Sesa Goa, you were bullish on Tata Global Beverages, and you were also bullish on SpiceJet. Are you still holding on to those 3 names?
Well, SpiceJet we have a big holding. We continue with the holding. Tata Global Beverage is partly in cashed out, and we have started to now rebuild our positions. I think the call was yesterday to start rebuild the positions again. We are in cashed out in this holding. Sesa Goa is on the margin. We haven't built up anything great in that because the stock also has done not much in that. So nothing more action in that. But the SpiceJet has been a good one for us, at least.
Your big bets for 2013, where you are allocating 6-7% of the total portfolio.
Strangely, we have started to allocate a big numbers to ICICI Bank because I think it's at a threshold point where it should explode in terms of price as the discovery of its real value comes in place. We are waiting for the results, but our big bet is that should give us about 30 to 40% return in the next 1 year and keeping it on the safer side. We're seeing it's at a lower of about 1170, 1150. It stops there and goes back again. And even today we are feeling bullish about it and we're building a position. So it's not a gangbuster in your language, but it's a steady earner in our language.
Right, but what would be a gangbuster in your language?
See, gangbusters are things like SpiceJet when you get double the money in 6 months.
So would you recommend SpiceJet right now, given their earnings?
See, you've got to be careful with SpiceJet because it will retract in price by about 20-25% in the next couple of months again, and you will get back to about 70 rupees. Our target for SpiceJet to sell out is about 70 rupees, but I think it will see corrections on the way. So you've got to be patient with that, but it should see 70 rupees in a matter of, I think, a few months.
Ajay, I'm assuming that Titan will crack today because gold import duties have gone up. Now, a fundamental analyst would argue that Titan has got nothing to do with gold import duty because they only borrow gold, they don't store gold. If Titan cracks below 250 or 260, would you be a buyer there?
See, okay, let me, for disclosure, say that we typically go short on Titan closer to 300 and we liquidate our position. So it's in a tight range. I think it's overvalued as a stock. In case specifically question is, given what's the gold scenario, I think it should be positive for Titan, because I think people are going to start buying more gold, not less gold. Because this custom duty increase is second step in the matter of 4 months the government has taken. And as we are saying, yesterday morning, for instance, before the government came out, we given a call to all our customers to buy gold. We're still saying buy the gold, because this is the one place where the government is fighting against a trend and the government will lose out. There is, with inflation and the price. So gold is the best bet in the Indian market. People will buy gold. So in my view, this increase is going to be benefiting Titan in the next 3 months or so, because people are going to rush to buy gold rather than wait for the budget or thereabout. Because I think more steps are going to come to make the gold costlier for India. Maybe wealth tax on gold may arrive. So I think more people are going to buy gold. So in our view, this is going to be a short-term positive for Titan, not a negative.